Good morning, 11 p.m. Okay, how are you today? Um, I'm sending you this recorded lesson for you to study at your own pace. So take time and please do the exercises that I will be uploading after this video. Before we proceed to our new lesson today, which is the adjusting journal entries, uh, let us first review our accounting cycle. Okay, so since this is your accounting cycle is also your performance test for both uh, FABM1 and business math, so I'm going to give you first a review of what is the accounting cycle and the steps of the accounting cycle. Okay, so accounting cycle. This is the standard sequence of uniform procedures repeated for each accounting period. Okay, so normally there are 10 steps in accounting cycle. First among the steps is for you to collect and analyze data from your transactions or the events of your business. So you identify, you analyze the events or transactions to be recorded. Okay, so always take note that there will always be a double entry in the next step. So you have to analyze what are the account titles that you have to debit? What are the account titles that you have to credit? Okay, so what are the account titles that increased? What are the account titles that have decreased? Okay, so you have to analyze the transactions. After analyzing the transactions, then you move on to the next step. Okay, so you do the journalizing. Okay, so journalizing is the activity on which you are going to record the transactions in your journal, in your general journal, which is called the book of the first or the original entry. Now, after journalizing the entries, okay, of your transaction, then you move to the next step, and that is the posting of journal entries to your general ledger. How do you call general ledger? General ledger is normally called as the book of, if the journal is the first entry, then ledger is the final entry. General ledger is called the book of the last or the final entry. After posting to the general ledger, then you prepare your unadjusted trial balance. So based from your ledger, you are now going to prepare your trial balance, and it is called your unadjusted. Okay, so unadjusted trial balance. Why is it unadjusted? Because after you prepare your unadjusted trial balance, then you have to look for the account titles that needed for journal for adjustments. Okay, so next step is for you to uh, prepare now your adjusting journal entries. Okay, so adjusting journal entries. Okay, so from there you prepare your worksheet and look for accounts that needs adjustments. Okay, so you pause and record your adjusting journal entries, which is our topic today. Okay, and we normally call it as AJE. Okay, adjusting journal entries. After you do the adjustments, after recording the adjustments, then you are going to post it again to your ledger, and after posting that adjusting journal entries, okay, so after recording and posting your adjusting journal entries, then you now prepare your adjusted trial balance. Okay, so you are now going to prepare your adjusted trial balance. After preparing your adjusted trial balance, then you are going to prepare now your financial statements. What are your financial statements? We have your balance sheet, or what we call the statements of financial position. We have your statement of comprehensive income, or the income statement. We have the cash flow statement and the statement of owner's equity. Okay, so those are your financial statements, and to be added to those four, we also have the notes to the financial statements. Okay, so after preparing your financial statements, then you are now going to journalize and post your closing journal entry. So After the final and financial statements, you're now going to pause and pause, journalize and pause. Okay, so you record and pause your closing journal entries. After closing your journal entries, then you again prepare your post closing trial balance. Then we have again your post closing trial balance. After the post closing trial balance, then we have the recording of the reverse entries. Okay, so we now have your journalizing and posting of reversing journal entries as needed. Sometimes this is, they call it optional. Okay, so the reversing entries. Okay, so that is your accounting cycle. Now for today, we're going to discuss specifically for adjusting entries. So in this lesson, we're going to familiarize ourselves about adjusting entries. Okay, so what are adjusting entries? Adjusting journal entries are, or AJE, are entries used to update the accounts prior to the preparation, okay, prior to the preparation of financial statements. Okay, it is because they affect more than one accounting period. Okay, so they affect one accounting period. It's not only the current period, but they will also affect the the next accounting period. Now, transactions are apportioned properly between the accounting periods affected. Okay, so there are proportion. Okay, so they are divided in proportion. The accounts affected are adjusted so that there will be no overstatement or understatement of balance sheet items and income statement items. Okay, for you to get the appropriate or exact amount for that particular period only. The process of determining an entity's net income or net loss requires certain income and expense accounts to be apportioned over several accounting periods. According to the accrual principle, okay, our accrual principle, do you still remember your accrual principle? Income is recognized at the time it is actually earned. Okay, it is actually earned, and expense is recognized. Okay, recognized at the time it is actually incurred or used. Thus, a receipt of a cash does not necessarily mean a recognition of of a of an expense or income, okay, of an income. Okay, it does not necessarily mean that if you receive cash, it's already automatic an income. And if you issue cash or payment of cash, it does not necessarily mean it's already a recognition of an expense. So we have to take note of that. An example of that case is when you receive a cash from a customer for a reservation of a hotel room for 2 weeks. However, the reservation will be for next month. Okay, for next month. So the receipt of cash from the customer does not necessarily mean the income should already be recognized. Okay, so the receipt of cash should be recognized more as a liability in a form of service to be rendered next month. Okay, so it is only after the customer has checked into the hotel for his or her 2-week stay can the advance payment, okay, be considered already as income because service has already been rendered. Okay, so take note, it has already been rendered. So when you receive an advance payment, it's not automatically an income unless it is already being rendered. Okay. Another example is a 1-year insurance premium paid for the insurance of a house. The amount paid representing a 1-year premium cannot be charged outright as an expense because it has to be apportioned into months. Okay? Because the premium paid covers a 1-year insurance. Hence, the full amount can only be charged as expense after 1 year. Okay, so you get it? Now let's move. So here are some of the transactions that needs adjustments. We have prepayments. What are prepayments? Prepayments are expenses already paid but not yet incurred or used. Okay, so like our example a while ago, so you paid a 1-year insurance but it's not yet incurred or used. So those are what we call prepayments. Okay, prepayments, expenses already paid but not yet incurred or used. Um, Here are the accounts subjected for adjustment for prepayment. Okay, so we have the asset method. This is normally what is being used, the asset method. Okay, so when you pay in advance that expense, okay, so your journal entry upon payment would be prepaid expense. You debit prepaid expense, okay, like prepaid rent, prepaid insurance. Okay, so those are prepaid. So you debit prepaid expense and then you credit cash. Okay. In the adjusting journal entry at the end of the accounting period, you debit expense. Like for example, if you debit if it is an insurance, then insurance expense. Okay? Rent expense. Then you credit prepaid expense to zero out or to deduct your prepaid expense. Take note, the amount of the adjusting journal entry represents the expired or used portions of the prepayments. Okay, so when you use an asset method, when you do the adjusting entry, you journalize or you record the part of the used or expired portion of the prepayment. So let's have examples. Example 1. On April 12, 2020, MAB company paid 27,000 pesos worth of car insurance premium for 1 year. Okay, take note, that's for 1 year and it starts April. Give the adjusting journal entry on June 30, 2020. So upon payment of the insurance, your journal entry would be, of course, the date is April 12, 2020. Prepaid insurance is 27,000. So we use the prepayment. Prepaid insurance 27,000. Cash 27,000 to record 1 year paid insurance. During the end of the accounting period, your adjusting journal entry would be June 30, 2020. You debit insurance expense for 4,500 pesos and you credit prepaid insurance 4,500 pesos to record the expired insurance. Okay, so let's see how it happened. How did we get the 4,500? The 27,000 amount of insurance premium represents insurance premium for 1 year. Okay, so or 12 months. So we have to apportion the 27,000 into 12 months. So you divide the 27,000 pesos by 12 months to get the monthly premium. Okay, so once you get the monthly premium, then you multiply by 2 months, representing the premium from May to June. Okay, so April 12, you paid for it, and so 1 month is on May, and then we have June. Okay, so you are getting May 1 to June 30, 2020. When the 27,000 was paid for 1 year insurance premium on April 12, prepaid insurance, okay, prepaid insurance representing 12-month insurance, okay? So, on June 30, the 27,000 prepaid insurance is not totally asset anymore. There are already parts of it which is already consumed or used. Okay, so you are now going to get the 2 months portion of that prepaid insurance and do the adjusting journal entry. So it is necessary to recognize the insurance expense for 2 months by debiting it and decreasing the balance of your prepaid insurance. Okay, so when you credit it, you are deducting, decreasing your prepaid insurance. Okay, so that is one example. Let's have another example. On May 2, 2020, MAB company paid 50,400 pesos for 1 year advance rent. Okay, so advance rent. So let's see the adjusting journal entry on December 31, 2020. Okay, so upon payment of that rent, you are going to record it for May 2, 2020, prepaid rent 50,400, cash 50,400. This is to record 1 year advance rent. Okay? Then we have for adjusting journal entry, this should be prepaid rent. It's not prepaid insurance. It should be prepaid rent. Okay? So pardon for this correction. Okay, so December 31, 2020, rent expense, then prepaid rent to record the expired rent, okay, or used portion of the prepaid rent. Okay, so the 50,400 amount of rent is an advance payment for 12 months. Okay, so to get the monthly portion of that rent, then you have to divide 50,400. Okay, 50,400 divided by 12 months to get the the payment per month. Then you multiply it by 8 months because it's May, June, July, August, okay, September, October, November, December. Okay, so it's for 8 months. So when you paid the 50,400, it is for 1 year. So it is proper to do the adjusting entry at the end of the accounting period and recognize the used portion of your prepaid rent. Okay, so you divide by 12 and multiply by 8 months, you get 33,600. You debit rent expense and you credit prepaid rent. Again, this is prepaid rent. Okay, that is prepaid rent. Now, let's move to another example. Here's another example for supplies. So, supplies account showed a balance of 18,000 pesos. Supplies used during the year amounted to 14,100. Okay, so give the adjusting journal entry on December 31. Take note, it says here, supplies used during the year amounted to 14,100. There is no computation necessary because the 14,100 supplies used during the year was already given. Okay, so when you bought supplies, okay, so you debited supplies. So the asset account supplies showed a balance of 18,000. So the supplies used during the year is 14,100. You just have to record that as an adjusting journal entry. You debit supplies expense on the end of the accounting period and you credit supplies for 14,100 to record the supplies used during the year. This should be recorded as expense by debiting supplies. Okay, supplies expense and then the supplies used. Okay, so but take note, if the problem says that the remaining supplies is 14,100, then the amount should be different. You have to deduct the amount from the balance, supplies balance. Okay, so take note if it is already used or the balance. Okay, so always remember that when we use the asset method, we record in the adjusting and journal entry the used amount or the expired amount of the account to be adjusted. So let's have an alternative method. Okay, so there's also an alternative method. A while ago, we used asset method. How about if we already use expense method? What is expense method? When we use expense method, okay, we use expense account to record. Let's say, for example, when you paid an expense, you record expense immediately right away. So you paid 1 year insurance. Okay, so you already recorded insurance expense and then cash. In the adjusting journal entry, it will be different. Okay, so you debit prepaid expense and then you credit the expense. The amount on the adjusting journal entry will now represent the unexpired. So if it is an expense method, you use the unexpired or unused portion of the prepayment. Let's have an example. Let's get the example one a while ago. Okay, so on April 12, 2020, MAB company paid 27,000 worth of car insurance premium for 1 year. Give the adjusting entry on June 30, 2020. Again, it is for 1 year. Look at the journal entry upon payment. Kanina, we have used prepaid insurance. In expense method, we are using insurance expense, 27,000, and then cash, 27,000. Okay, so insurance expense, then in the adjusting journal entry, we are going to debit prepaid insurance, but look at the amount. It's 22,500. This is the unused portion. This is the unexpired portion of the insurance, and then we credit insurance expense. Okay, so which means we are deducting from insurance expense. Yes, from the insurance expense and putting it for prepaid insurance. Okay, so again, take note, in expense method, in the adjusting entry, we are recording the unexpired or unused portion of the prepayments. Okay, so we have two methods for the prepayments. We have the asset method and we have the expense method. Next one, after prepayments, we also have what we call deferrals. So what are deferrals? Deferrals are unearned or deferred income. Okay, so it is income already received but not yet earned. Remember our example a while ago? You receive advance payment for hotel accommodation, so you have already received the money, but the income is not yet earned because the service is not yet rendered. Okay, so that is an example of a deferred or unearned income. So here are the accounts that are subjected to be adjusted. Okay, so we call it liability method. So normally we use liability method to record deferrals or unearned incomes. Okay, so journal entry upon cash receipt. When you receive the cash, you debit, of course, the cash because you already received it, and then you credit unearned income. In the adjusting journal entry at the end of the accounting period, you debit unearned income and then you credit income. Note, the amount of the adjusting journal entry will now represent the earned portion. Okay, the earned portion of the amount initially earned or received. Okay, so yung earned portion. Now, let's have an example. On April 1, 2020, MAB accounting firm received 138,000 pesos consultancy fee to be rendered in the next 6 months. Give the adjusting entry on June 30, 2020. Okay, so on April, upon receiving the cash, you record the cash, you debit 130,000, and then you credit unearned consultancy fee to record received cash for consultancy to be rendered for 6 months. Okay, so in the adjusting journal entry at the end of the accounting period for June 30, 2020, you debit unearned consultancy fee for the amount earned already. Okay, for the part of the consultancy fees being rendered. Then the consultancy fee to be credited. Okay, so 69,000 to realize already the income. So that is to record the earned consultancy fees. Let us analyze. The 138,000 pesos received is for 6 months. Okay, for 6 months consultancy fee. Therefore, you have to divide it for 6 months to get the amount of the consultancy fee monthly. So now we have April to June. So April, May, June. Okay, April, May, June. April is considered because we started April 1 and it's already started. So April, May, June. So 3 months. So 138,000 divided by 6 times 3 months, and then you get 69,000 pesos. Okay, so 3 months has been rendered and therefore realized as income already. So we need to record it as adjusting journal entry. Okay, so again, it is the earned portion. Another example. On September 1, 2020, Mab Realty received 60,000 peso advance rent for the next 6 months. Give the adjusting entry on December 30, 2020. Okay, so let's have a journal entry. Upon payment, of course, you debit cash, you received cash, 60,000. Then you credit unearned rent income. Okay, unearned rent income or deferred rent income. Just be consistent with what account titles you are using. And then in the adjusting journal entry, okay, for December 30, 2020, you debit unearned rent income with the amount that is already being earned, and then you credit rent income for 40,000. Okay, so 60,000 divided by 6 months times September, October, November, December. So that is for 4 months. Okay, so that is how you do for your unearned or deferred income. However, there is also an alternative method like prepayments, deferrals, or unearned income have also what we call an alternative method. Aside from the liability method, we can also use income method. Okay. So in the income method, when you receive the cash, you debit cash and then you credit income. Okay, so uh, you debit the amount of the cash and then you credit the income. In the adjusting journal entry, you credit the income, you debit the income and then you credit unearned income. So doon lang lalabas si unearned income to record income not yet earned. If in the liability method, we used to record the AGA for the earned portion of the accrue of the deferrals. In the income method, we record the unearned portion of the amount initially received. Okay, the unearned, yung hindi mo pa nare-render, yung hindi mo pa na-earn. Now, let's have the example. On April 1, 2020, MAB accounting firm received 138,000 consultancy fee to be rendered in the next 6 months. Let's see for the adjusting entry. First, in the journal entry upon payment, of course, you debit cash, you receive cash. But look, in the income method, we already use consultancy fee instead of unearned consultancy fee or deferred consultancy fee. Okay, so that is how you record the payment. In the adjusting journal entry at the end of the accounting period, which is June 30, 2020, we debit consultancy fee for 132,000 and then we credit unearned consultancy fee for 132,000. This is to realize that there are portions of that consultancy fee which is not yet earned. Okay? Not yet earned because you have not yet rendered the service, the consultancy. Okay? So you now have to decrease first your consultancy fee by 132,000 and transfer it at the moment to the unearned consultancy fee for 132,000. So that is the difference of liability method and income method. Okay? So that is for deferrals or unearned income. Now, let's move to another transaction, and that is accrued expenses. What are accrued expenses? These are expenses already incurred or used but not yet paid. Okay, so you have already incurred or used but not yet paid. Okay, so what are the examples? You receive a bill from Luweco. Okay, so that bill is for the month. Let's say today is April. You receive the bill from Luweco for the month of March, and that is an accrued expense. Okay, you are yet to pay that. You have already consumed it. You receive already the bill, but you have not yet paid it. Okay, so the adjusting journal entry for that is you debit expenses and then you credit the expenses payable. Okay, so that is the record unpaid expenses. Now, let's have an example. The company received a Luweco bill in the amount of 5,700 pesos on December 30, 2020. The company intends to pay that bill on January 5 only of 2021. So what would be the adjusting entry at the end of the accounting period? You already received, okay, the bill. On December 31, 2020, you record it. Utilities expense, 5,700 because you've already consumed it. Utilities payable, 5,700 to record received electric bill. This is a liability on the part of the company because the Luweco bill is for the month of December. But the company has not yet paid for it. Okay, so a liability on the part of the company should be recognized at the end of the accounting period. Okay, another example. Unpaid salaries at the end of December 31, 2020 amounted to 27,500. This needs to be adjusted because the workers or your employees have already rendered their service to your company and yet you were not able to pay their salaries yet. Okay, so you have to make a record, an adjusting journal entry. So you have to journalize debit salaries expense, okay? Then you credit salaries payable because it is your liability already to pay that salaries to your employees. Okay, so that is for what we call accrued expenses. Okay, so expenses already consumed but not yet paid. You are going to recognize it as a liability. Now, let's have also what we call accrued income. What is accrued income? O, kanina merong unearned and deferred income. Now, we also have what we call accrued income. What is accrued income? This is an income already earned but not yet received. Kanina, you already received the payment but you have not yet rendered the service or you have not delivered yet the merchandise. In the accrued income, you have already rendered your service or you have delivered the products or your merchandise, but you have not yet received the payment. Okay, that is accrued income. Now, the adjusting journal entry for that is income receivable debit and then you credit income to record income earned. Okay, so that is the adjusting journal entry. Let's have an example to make it more clear. A 1-year 6% note receivable in the amount of 200,000 pesos was received on January 1, 2021. The interest and the principal are payable on maturity date. Give the adjusting journal entry on June 30, 2021. Okay, so there is a note receivable with a 6% interest. The amount is 200,000. Okay, and it was received on January 1, 2021. This has to be paid on the maturity date. Okay, so that is after a year. Okay, so that is after a year. Now, let's have the journal entry for June 30. Okay, so from January 1 to June 30, there's only 6 months. Okay, so 6 months pa lang, you are not yet you do not need to pay yet. Okay, for the notes, or you do not have to collect yet for the notes. Now, for the adjusting journal entry on June 30, 2021, you debit interest receivable for 6,000, then interest income for 6,000 pesos. This is to record interest income earned. How did I get 6,000 pesos? Let's have this. Okay, so interest is equals to principal times the rate times the time. So we have the principal, which is 200,000 pesos, times what is the interest on the note is 6%, times half year because that is 6 months. Okay, half year or 6 months, Then we have to multiply everything. 200,000 times 0.06 times 1 over 2 or half a year. Then you get 6,000 pesos. Okay, you get 6,000 pesos. The note receivable bears interest at 6% per annum. That is for the whole year. The interest will be received after 1 year on January 1, 2017. However, the note has already earned half-year interest on June 30. Okay, so in the amount of 6,000 pesos, although this interest has not yet been received, an adjusting journal entry is necessary to recognize, the interest earned on the notes receivable for 6 months. That is from January 1 to June 30. Okay. Next one. So let's move to another transaction. And this is what we call bad debts, doubtful accounts, or uncollectible accounts. If you remember, this is the contra asset account of accounts receivable. Okay, this is a contra asset account of an accounts receivable. These are losses due to uncollectible accounts. So you are estimating parts of the accounts receivable that you cannot collect anymore. And you can call it either bad debts or doubtful accounts or uncollectible accounts. It depends on what you use in your account title in your company, but please be consistent in using account titles. Okay? That's why we have our chart of accounts. Okay, so the adjusting journal entry at the end of the counting period is you debit. You debit either bad debts expense or doubtful account expense or uncollectible accounts expense. And then you credit allowance for bad debts, allowance for doubtful accounts, or allowance for for uncollectible accounts, and that is the contra asset account of accounts receivable. In the narration, you just say to record estimated uncollectible accounts. Let's have an example. Accounts receivable shows a balance of 100,000 pesos. It is estimated that 8% of this is uncollectible. Okay, so 8% from 100,000 is uncollectible. That is an estimation. Give the adjusting journal entry on December 31, 2020 for the provision of the estimated uncollectible account. Okay, so let's see the adjusting journal entry. December 30, 2020, you debit bad debts expense, 8,000 pesos, and then you credit allowance for bad debts, 8,000 pesos. This is to record estimated uncollectible accounts. Okay, so that is to record your estimated uncollectible accounts. So you just get 8% of 100,000 to come up for 8,000 pesos. The next transaction is the depreciation expense. Okay, so this is now where you see your accumulated depreciation, furniture and fixtures, okay, your PPEs, your equipment, machineries. Okay, so we use depreciation expense because what is depreciation expense? This is the allocation of plant asset cost over its estimated useful life. This is the expense allotted for the wear and tear of property, plant, and equipment due to passage of time. Okay, so there are three factors considered in computing the depreciation expense. Okay, so cost is the purchase price of the depreciable asset. Okay, so that is the cost, the purchase price of that depreciable asset. Then we have the salvage value. It is the estimated value of the asset at the end of its useful life. That is the salvage value. Then we have the estimated useful life. It is not an exact measurement, okay? So as the name connotes, it is an estimation. It is just mere estimation of the number of years an asset can be useful to the entity. So these are the three factors. You have the cost, the salvage value, and the estimated useful life. To compute For the annual depreciation, okay, so we have the cost, we have less salvage value, get the depreciable cost. You divide it by estimated useful life to get the annual depreciation. The process of recording depreciation expenses does not directly charge depreciation to the asset account. The charge is recorded in a contra asset account, okay, in a contra asset account called accumulated depreciation. The use of this account allows the original cost of the asset and the related accumulated depreciation account to be shown in the balance sheet. Okay, so you can see it. If you remember in our balance sheet, let's say for example, furniture and fixtures 50,000, accumulated depreciation furniture and fixtures 5,000. That is a less. That is a negative. Okay, so that it will be deducted from the cost of the furniture and fixtures. Okay, so the balance of the accumulated depreciation is deducted from the cost of the asset to get the carrying value of the asset. Okay, the carrying value of the asset, so that in the balance sheet, what will reflect there is the carrying value of the asset or the depreciable asset. Okay, so let's have an example. A building with an estimated useful life of 30 years finished construction on June 1, 2020. Okay, so the estimated life of that building is 30 years. The cost of the building is 4.8 million pesos with an estimated salvage value of 300,000 pesos. Okay, so the adjusting journal entry at the end of the accounting period or December 31, 2020 is to debit depreciation expense 87,500, then accumulated depreciation 87,500. This is to record depreciation expense for building. How did I get it? Okay, so you get first the cost, which is 4.8 million. You less the salvage value. It's mentioned here. There is a salvage value of 300,000. And there you go. You get already the depreciable cost. That is the depreciable cost. Then you divide it by the estimated useful life, which is 30 years, which means an annual depreciation of 150,000 pesos. Annual. So when you say annual, that is for 12 months. So you divide it for 12 months times 7 months, which is uh, from June. Okay? Is it from, June, July, August, September, October, November, December. Yeah, tama. June, July, August, September, October, November, December. And that is 7 months. And to get it, 87,500. That is to how to get the 7-month depreciation or accumulated depreciation of the building. Okay, so those are the transactions that is to be considered for the adjusting journal entries. So that is for the adjusting journal entries. So after you watch and you watch this video, okay, so you learn from it and then you do the exercises that I am going to upload later in your Google Classroom. Okay, so in the next lesson that I'm going to discuss with you is the completion already of the accounting cycle. So let's discuss about the closing entries. Okay, so with that, thank you for this day, my dear students. Please log into your Google Classroom to watch for the video. Please analyze, learn, and study about adjusting journal entries. And I hope you could learn from this and apply it to your performance tasks. I want to see some of the transactions application in your performance tasks. And please do not forget to apply also the concepts from your business math so that that performance task will form part of both subjects. With that, good luck everyone to the exercises and see you next meeting. Have a good day, everyone.